This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the AIPIS show for accredited income property investment specialists and those who aspire to be. If you're a real estate, mortgage, or financial professional, this is the place for you. We'll explore innovative investment analysis, sales, marketing, and income-generating strategies for the most historically proven wealth creator, income property. Learn from the experts as they show you how to build a better business and a better life.
It's my pleasure to welcome Adam Jason to the show. Yes, that is not a mistake, that name. My first name is his last name. He is founder and CEO of BRRRR Invest. You've all heard about the BRRRR method, and he has a solution to help make that easier. And he also happens to be coming to us from Medellin, as I say it, or as they say it, Medellin, Colombia, where I just was about a month ago. And we'll talk about that a little bit too. Adam, welcome. How are you?
Great. Thanks. It's a pleasure to be with you. I appreciate the opportunity.
Yep. It's good to have you. It's good to have you. So, the BRRRR method is popular. It's talked about a lot. Why don't you just explain for the people who don't know what that is, what it means, and why it's important?
Absolutely. So BRRRR is an acronym for buy, rehab, rent, refinance, repeat. It's a kind of twist on your typical buy and hold and investment theory for real estate, but basically the concept and the goal is to buy a property that you find that's undervalued, create value by doing an effective rehab on the property, getting a tenant into the property and stabilizing it, increasing the value through that rehab and that stabilization period, and then going to your bank or another lender and getting a loan that basically pays you back for the money that you've put into the property. So, if you put in cash, et cetera, the idea is to get a loan from the bank that returns you your capital so that you can then go on and do the next project and recycle that same cash and build your portfolio that way.
Yeah, that's one of the tremendous things about income property or just real estate in general is you can buy the asset and then you can potentially get all your money back out of that purchase and still have the asset. It's really an incredible, multidimensional asset class, as I've long said. That's what we all love about it. But why in BRRRR is the concept to hold the property rather than flip the property? It seems like there's been a renewed interest from the people that might usually be in the flipper community the past several years to actually hold the properties, which, by the way, I think is the best deal. I mean, I've done flips. Sure. I'm mostly a buy and hold guy. And by the way, you don't have to necessarily rehab to do BRRRR. You could take that 1R out sometimes and just
Absolutely.
Buy a property and refinance and repeat. Well, rent, I skipped that, but yeah, you got the idea. But why do you think there's been this renewed interest in the hold concept?
I think people see the value in the long-term wealth creation of real estate. I think you're having people realize kind of the tax benefits that come along with it, all the advantages that you get by holding real estate versus kind of the quick turnover that you would have from a flip. I think people might like the less extensive rehab that's required. And I think people like seeing the checks come in the mail every month. I know I do in my own portfolio. So I think it's a good way of running a business and being able to also be something that can be a little bit more, I think, potentially passive than overseeing flips and making sure houses are staged correctly and that kind of thing. I think it gives you a little bit more flexibility. And I think it's a great method for people who are doing it kind of less as a day job and more of a wealth building strategy.
So why is the rehab less extensive?
Yeah, I think when you're going to flip a property, you're trying to kind of create something that is the ideal vision for somebody about their dream house and where they'd like to live, et cetera. Whereas when you're doing the BRRRR, you're really kind of setting it up to serve as a rental property. So for example, in my own portfolio, something that I might put 25,000 in to put in high-end finishes, etc. for a flip. I wouldn't do for a rental property because you're going to have turnovers and tenants. It's just not the kind of, it's a different market that you're going for, and people who expect to live in a property for a short period of time and then hand it over to somebody else and move on to their next place to live. So it's a little bit of a different strategy when it comes to the rehab, which I think is nice because it also, shortens the period before you start seeing some cash coming in, and also lowers, I think, the risk and potential out-of-pocket costs that you have to make and outlay before you kind of have some confirmation that you're going to have a buyer for a flip, something along those lines.
Mm-hmm. And, most of our clients for the past 16 years, I've been helping people buy properties nationwide and do the turnkey approach. And so not many of them have the appetite to, go hunting for deals and negotiating deals and all that kind of stuff. But how do you get deal flow? That's the magic question, especially in a market with tight inventory, and inventory has obviously been constrained the past many years because the economy's booming. And now we might be facing inventory constraints for the opposite reason, kind of ironically almost, supply chain disruption, just this sort of anemic economy that we're moving. I don't know, it's anybody's guess what's going to happen, but what do you think? Deal flow is the question.
Sure. I think the biggest thing is kind of starting out with your goals in mind and setting criteria for kind of where you're going to invest. So I think a lot of investors will say, oh, I want to do this strategy and I'm going to look in all these different neighborhoods and all over this area, etc. I think the better approach really is to kind of define your criteria, define your neighborhoods, etc., and just know your criteria soundly so that when opportunities come up, you can jump on them and not kind of dilute yourself by looking at too much. But, the way we do it in ours and the people I work with are, we have the specific criteria. We have the specific neighborhoods. We know the prices that we're willing to pay. We know what the rental market looks like. We know what kind of rehab is required. So it takes some education at the front end, but then you can kind of move things along without hesitation. And then we just keep our eyes open for stuff. You got the MLS we've established, which I think is super important, relationships with folks in the area. So whether it be the property managers you work with, contractors that you take care of by hiring them repeatedly for your projects, agents in the area, and just kind of keeping an eye out there. I think, things tend to come as you have those relationships. So that's how we kind of have the deals coming to us.
Mm-hmm. Take us through a deal, if you would. Maybe elaborate a little more on finding the property and then what you do next.
Sure. So like I said, I think getting out from the start and having kind of clear criteria of what you're willing to look at. So for example, I'm originally from the Buffalo, New York area and know the neighborhoods there, kind of know the communities, etc. So I'll say, okay, in these 3 neighborhoods, I'm looking for properties in this specific price range, and I know I'm willing to do this amount of rehab, and it's likely that an appraiser in that area is going to give me this much amount of credit for the work that I'm willing to put in, and I know what that rent is going to look like. So the process really would be finding the deal, working with the team that I have in place there to execute on the rehab, getting the property listed, getting it rented, and then probably the least fun part is working with the lenders to try and get that money back and move on to the next project. And then, we get everything signed up for having the property managed by the team that I have there. And then it's just a simple process of finding and reviewing tenants, and then, waiting for the cash flow to come in and then just managing the property on a go-forward basis.
But specifically, like when you use your system, it helps you with that process. You find the deal and then you make the offer, and there are tricks of the trade to that, and you get it under contract. Then you've got to start dealing with contractors to do the rehab and the renovation. There's a lot of detail in all that stuff. It's kind of funny, and I do the same thing
Absolutely.
you just did, right?
Mm-hmm.
I've been doing it so long, it's just all in my subconscious. So when someone asks me to explain it, I'm like, you just do it.
Right.
But everybody listening, it's not that simple. Like, take us through the steps, really. And how we analyze the deal. You go through the analysis of figuring out your solution, the sort of traditional way to do it. There's a lot there. Elaborate on all of this.
Yeah. So what we've done, and maybe just to give some color on the BRRRRinvest.com and what we've set up and kind of the systems that we use for our own investing, is basically, I've created a tool that can be used to analyze deals quickly. I can look through the system that I have 10 deals in the matter of 10 minutes just by inputting some information. We make a lot of offers, and we've set up the solution that is available on the website to be able to fully integrate with the analysis tools that we do. So we do the analysis. If we like it, we click a button, generates the offer letter automatically, and I either send it to an agent to process and send to the corresponding agent, or we can send directly to sellers. As an attorney by trade and in the real estate world, I've over time been able to develop template contracts that I use with my property managers, contractors, tenants, et cetera, that, we can literally fill in the blanks in 2 minutes and send those off to have signed. And I think the thing that we've done and that's made this, frankly, a fun experience and a prosperous experience is being able to anticipate problems and plan for those in the contracts that we've done.
All right. So stop there for a moment. If you would just remember where you were. What kind of problems come up in the contracts, and what do you help people anticipate?
I think if we're talking about contractors, the big thing is, I'll go through a couple, but one of the big ones is, very general scopes of work. So, okay, I'm going to renovate the kitchen, or I'm going to repair the bathroom. What we've seen is, if you try to have those discussions down the road as to the exact kind of work that's going to be done, and you're trying to battle about it after the fact, it creates issues. So one thing, I guess, as my attorney mind has trained me to do is anticipate problems kind of at the front end and learn from experience. So the other thing we do, which I think is beneficial to investors, is a lot of times contractors will buy materials for a project and upcharge the investor for them. So what we've done is basically given investors the right to purchase the materials for the project, retain all the extras, use contractor discounts to be able to do that. And it also actually provides a lot of savings for investors if you're doing, a big rehab, and maybe you can put it on your credit card and get a free vacation for the next trip you go on with the points that are generated there. So there's just a lot of different ways that we say, how can we put more money in the investor's pocket, that if they were to try and kind of come up with the specific contract language that they need on their own, or they were to hire an attorney, it could be challenging. If you're doing it on your own, it could be challenging because you're not a trained lawyer. If you're hiring an attorney, you're going to pay a bunch of money.
Okay. You can't hire an attorney for individual stuff like this. It's just cost prohibitive. And look at, you're an attorney. People always seem to complain about their attorneys and their bad legal experiences.
Yeah.
But what I never hear is a positive contractor experience. I mean, wow.
Right.
Talk about a group people complain about contractors. People are always complaining about their contractors more than their lawyers. So you can take comfort in that one, being an attorney. So what things go wrong with the contractors, and what kind of clauses do you need in the contracts? Really drill down on that.
Another example would be delays that occur in the construction process. So what we've done is kind of made it a mutual relationship and have a system in the contracts of penalties and incentives. So, for example, if you're my contractor and we set a 2-week deadline for the process, and you finish on time or early, we give you a bonus. If you finish late, we deduct from the total cost, and you'd be surprised to see how fast
I know.
people
I
work
know.
when
I've
deadline's
done that
approaching.
too. Yeah. Another thing I'll say to that can help make sure your jobs get done on time is to require the contractor to have all the parts and materials in advance. In fact, better yet, now you got to worry about theft problems, make sure you have a secure site, but before you pay them their first payment, have all those at the job site. Have all that stuff there, as long as you can secure the job site properly, so that you can see all of the stuff, so that they can't blame it on a supply shortage, which, by the way, we're coming into a significant problem with supply shortages with China being offline. I think that's one good tip. It's not a legal or contract tip necessarily, but it's just a practice tip.
But I think it's a great point, and it's something that we've accounted for in our contracts that lay out kind of the payment terms. So instead of have a contractor say, "Oh, I want 100% up front," or "I want," there's
never
miles.
pay them more than 25%
exactly.
up front. Yeah, you got to have milestones along the way. Yeah.
And that does create a legal issue. So we've put milestones in place where the contract is clear. You just have to set expectations. And I think we try to do that through the system we've created. We do the same thing with property managers, and we do the same thing with tenants. The thing that you talked about we talked about at the beginning, and what's the appeal of the BRRRR method, et cetera, and the passive nature that can come with it, and the mailbox money that comes with the checks every month. Part of that is managing relationships with tenants, and through your experience that all kinds of issues can come up, and we try to really put it on autopilot. So we have automatic rent escalation provisions in the contracts, auto renewal provisions, very clear about penalties for late rent, etc. So taking all of those discussions away at the start, where a tenant calls you or your property manager calls you and asks you, "Hey, what are we going to do in those situations?" We've taken our experience that a regular attorney or a Google document won't account for, and made that available to investors so that they're not having to think of all of this on their own.
Yeah. Okay. Good stuff. Anything else you want to share with our listeners as we wrap it up?
Yeah, no, I think if you guys check it out, the BRRRRinvest.com/welcome, we have a free trial available, completely risk-free to try out. We're here to take any questions and help you through things if there's something that's not intuitive, but it's something that could really easily fuel your investing, let you do a lot of deals quickly, securely, and save you a ton of money along the way. So that's what we've tried to provide to people.
Actually, I have one other question area.
Sure.
And that is, you are American. You left the U.S. and moved to Medellin, Colombia a couple of years ago. I mentioned to you that I was just there about a month ago. So why Medellin? And you're doing real estate deals down there too, right?
I am. Yeah. So I was I was switching law firms back in the U.S. I practiced for 10 years there as a real estate attorney, but also in corporate finance, corporate governance, securities world, doing private public issuances for real estate companies, and was down here on vacation, fell in love with it, found a firm that was doing projects down here in Colombia in the short-term rental and boutique hotel space. And I've been here for about 2.5 years as the general counsel for the company. I'm a partner now for the company, and we've done about 80 million in deals, and we're doing kind of BRRRR on a grander scale. We have some projects in Puerto Rico that we've financed through private offerings, 506c for those folks who are familiar with that process, and now we're refinancing those out through bank loans and moving on to the next project. So it's a great strategy for single family homes or larger projects. But I love it down here. It gives us the flexibility to do things that we might not be able to. And there's just a whole nother world of real estate that we're trying to open up to people who are looking to diversify their portfolios and interested in different projects. And so we're trying to, as America.
Yeah.
Sure.
One of the things I want to ask you about that is when you look around the world, you really realize that the U.S. has a very, very special type of real estate market. Cost of construction is very low here. I know everybody thinks it's expensive, but if you think the U.S. is expensive, go around the world and you'll be surprised. But, the fact that we have this government-sponsored financing in the U.S., it just makes such a difference. And what's interesting about a market like Medellin is that it's so illiquid. Things move so slowly. That presents a problem, but it also presents an opportunity. And I'd just like to maybe have you speak to that in a moment. It's so different than it is in the US. The other thing that's just radically different is transaction difficulty much higher. So there's a lot less trading because there's more of a barrier. Yes. The market is very opaque. You don't have all this big data. You don't have the MLS like you do here. You don't have Zillow. You don't have public records to understand comparable values, which I don't like all that stuff. I mean, I've been to 87 countries. I've looked at real estate all around the world many times. But some people like that, and I guess you're probably one of them. What do you think?
I think Medellin and Colombia in generally, and being outside the U.S. definitely presents some unique opportunities and challenges. We take for granted in the U.S., like you said, that you can buy a house for 5% down and get a loan for the rest, et cetera. In Colombia, for example, kind of private lending and especially lending for foreigners is almost non-existent. So if you do get a mortgage, you're paying in like the 9 to 12% per year range and tons of fees. And you also, like you said, you don't have the kind of transparency that you get in the US. And you also have a different culture in terms of work ethic and how things get done on time and what people's motivations are. It does create a different dynamic for trying to do business. But it really is, the business that we're doing is really trying to create unique opportunities for people where we kind of handle all those headaches and create a passive income stream for people and, for the folks that are actually buying properties and then handing over to us to manage a true kind of lifestyle investment that also returns them capital. So we often joke, like, why are we making it so hard on ourselves? But maybe somebody's got to do it and we have fun at the same time. And you need somebody who's on the ground here and has time in these markets to be able to manage all these factors. It's not like going, I've invested in Dallas, now I'm going to go invest in Houston. It doesn't carry over.
Yeah, right. No, it's a lot different. What are the landlord-tenant laws like in Colombia? Do people, what if they don't pay their rent? Can you evict them easily? It's so much different. I mean, it's foreign, quite literally, pardon the pun. What do you do? It's
very protective of tenants, especially
that's what I would think, tenant friendly, yeah.
Very tenant friendly, and especially as you go through here, what's the stratuses of income. So, kind of the same thing you might see in the U.S. as the income base gets lower, the landlord-tenant laws change to favor the tenant even more so. The other system here that's pretty interesting from a legal perspective and an acquisition of property perspective is the foreclosure process. So you basically have auctions that the properties here have to sell for at least 70% of the auction price, or they can't, the transaction can't occur. So you have groups that get together before the auction. 5 people will say, okay, I want this one, you want that one, I want this one, you want that one. And everything sells for exactly 70% of the listed price. And I pay you, $1 million pesos, which would be about $300 to make sure that you don't bid on this one because I'm going to get that one. So you have kind of all this collusion and different market challenges that if you were just going to say, I'm going to go down to Colombia and start buying foreclosure properties, you'd run into an interesting world. And of course, you have everything that's done, in Spanish. So that's another obvious challenge for folks. And you just don't have the efficiencies that you see in the U.S. when it comes to legal processes and banks and all the kind of things that make investing in real estate in the U.S. a little bit more of a passive endeavor.
Very interesting stuff. Well, hey, thanks for filling us in on that. And thanks for joining us today, and happy investing to you.
You too. Stay safe. I appreciate your time and the opportunity to talk to your audience. And like I said, if anybody wants to check out the website, BRRRRinvest.com, and I'm here for questions. You'll find my email, contact information there. So don't hesitate to reach out. And thank you again, Jason. I appreciate it.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.